Hello, everyone. We are live for another episode of the Tech Behind FinTech. Excited about today's topic. So we have brick and mortar real estate, crypto, and blockchain. What's possible and what's the intersection? So I have a great guest today that I'm excited to bring on the show. His name is Nick Hilaris. Welcome, Nick, to our show.
Thanks, Nnamdi. Great to be here.
Great. As you know, in the Tech Behind FinTech, we jump behind the technology, as you say, behind the money. Today's we're going to cover crypto, but really get into real estate, and it's going to be really great. Without further ado, let me read Nick's bio, and then we'll jump into it. Nick Hilaris is the founder and president of Metros Capital, a company dedicated to investing in and developing transformative real estate projects. Nick believes strongly in the power of the built environment to shape lives and is dedicated to improving lifestyles in America's greatest cities throughout a commitment to innovation, quality, design, and sustainability. Metros Capital invests in the urban core of America's great cities and currently has projects in Los Angeles, Atlanta, and Nashville. Prior to founding Metros, he was a co-founder and president of Age Capital, where he invested more than $150 million in residential and multifamily assets, rehabilitating and selling over 150 residential properties throughout the Los Angeles County and over 2,400 multifamily units throughout the Southeast. Nick is also the author and publisher of Profit, a widely read monthly financial newsletter. In addition, Nick holds a Bachelor of Arts with high honors from the University of Michigan and a Juris Doctor from the Stanford Law School. So we could say that you know a little bit about real estate, huh, Nick?
Yeah, thank you. Yes, I've been doing this for a while now. Yep.
That's awesome. So many viewers don't know my passions are technology, fitness and health, and real estate. On the side, throughout my career, I've been a real estate investor for over 20 years, doing single families and multifamilies in the Philadelphia area. So bringing two out of the three on a show topic today is like extremely exciting for me. As you guys know, with our show, before we jump into the topic, we usually talk about a relevant news article, and then we slide into our main topic. So with that said, today's article that we want to cover, crypto to reach 1 billion users in 2030. The Boston consulting firm, they just did some research around that. They have a slide that goes on. So you're going to read some things about it. So a report by the Boston Consulting Group, BCG, showed that 0.3% of individual wealth is invested in crypto, while 25% is in equities. It's a very common sentiment for people outside of the crypto community to look at Bitcoin prices and make a conclusion that it's too late to get into crypto. However, a report shows that the industry is still at the beginning phase of the adoption curve. So by comparing the data that they have, the researchers were able to predict that by 2030, crypto users may reach 1 billion if the trend line continues in its course. So I just want to get Nick's opinion on that.
Yeah, so look, I think this is a really important moment for crypto because the market's been wobbling and crypto's been going through, what looks and feels like a late 19th century or early 20th century kind of banking crisis. And so you have the whole sort of cast of characters that has appeared time and time again in financial history. So you've got the banks that are freezing their depositors from removing their funds with groups like Celsius and BlockFi running into problems. You got investment funds that are blowing up in spectacular fashion and perhaps maybe even have fraud behind them. It's unclear right now from the information that we have whether these hedge funds were fraud, but there certainly seems like there might have been. And so you have this mix, this crazy mix. And meanwhile, a lot of crypto projects are down huge, and yet crypto is still there and still strong. And I think it's ultimately, in my view, it's a bullish sign. So I kind of agree with the point of this report from BCG. Like if there was ever a moment when crypto was going to be like seriously questioned, it's right now, and is holding up despite all this negative attention and real problems with the ecosystem. So I remain bullish on crypto. I think it has some problems to work through, but I'm kind of with BCG on this.
And that's interesting that you bring that up, right? A few things, I hear both sides of the argument. I know people that are staunch non-believers in crypto. They wouldn't put a penny into it. And I know people that are bullish all in on crypto. I think regardless, we cannot deny that digital currency in the next 10 years is going to take place. I mean, you have governments looking into it. So the whole fiat paper money, I don't see that lasting in the future, right? People want to exchange money faster. It's global, so we know it's going to be some sort of digital form. How that may happen, whether it's in a Bitcoin form, whether it's some currency we haven't heard of yet, who knows? But we do know things are going to go digital. So I'm with you on this in terms of where the market is going by 2030. I don't know the exact numbers if it's $1 billion, but I know it's going to increase from what we have it today. And I like the point that you made, right? If at any time for it to be totally zero, worthless, is now. I mean, you have a lot of it. This is deregulated, like what Celsius did to their users in terms of blocking withdrawals and things of that nature. No modern bank can do that right now. It's just it sounds absolutely ludicrous. But if we think about years, decades, 100 years ago, it may have been, you could get away with things like that because there's a lack of regulatory bodies involved. So great points throughout.
Yeah, I feel like the extreme negative sentiment about crypto ignores too much of the story. So what we're going to talk about today, I actually think is a great example of why you can't really ignore crypto and blockchain, because there's some legacy components or systems in our financial system in particular that are operating on like technologically antiquated procedures, and real estate is like right there in the middle. And the one element of the crypto movement that everyone's excited about in real estate is sort of just the basic blockchain idea. That you can set the crypto aside, like maybe, who knows whether the cryptography piece of this is part of the future. I think that's still a question, an outstanding question, but clearly using the idea of these digital ledgers to improve these legacy financial systems, like dealing with titles on properties or buying and selling properties. Like, there is so much opportunity there that you just can't ignore it, because what we're doing now is like designed 50, 60 years ago, and it really doesn't work. So a lot of potential and can't ignore it.
And I think that's a perfect segue into today's topic. So let's jump into it. Let me move this. So today's topic, brick and mortar real estate, crypto and blockchain, what's possible. Nick has a newsletter called Profit, and on the September 2021 issue of the monthly newsletter, he wrote an article, The Blockchain and Real Estate, False Promise or Revolution. So, and we want to get into that. And that's the main topic today. It's a few things you said in the article that I found very interesting. And so I'm going to read this, and then I have to kind of make a disclosure. Mortgage broker fees should go to zero. Same for escrow costs and most transactional lawyer bills. There will probably always be the need for lawyers for larger or complex projects, but these are far by an exception. Most real estate transactions are being done with standard contract forms and non-negotiable loan documents. In transactions like these, costs should go to zero. So, full disclosure, obviously, everyone who watches my show, and they go to my LinkedIn, obviously main career, technology background in it. In 2003, I did get a real estate license to close my own deals. It just made the process faster, so I got it. So I know a lot of people in the business, Nick, that will take serious offense to this topic in terms of mortgage broker fees going to zero because they feel they play an important role. I mean, I get the transactions cost, right? Because it's various ways we can automate to bring certain things down. But please talk through your this portion of your article.
Sure. Yeah, this one actually, when I sent this out, because a bunch of my friends are also mortgage brokers and they read the newsletter, and I got a bunch of comments back like, "Oh, hey, you think I'm worthless?" And so I had to deal with that on a personal level already. So I'm used to this question, but I said this because I actually think it's sort of true. Like maybe they don't go to zero, but certainly the idea of paying these fees that we're paying now is I see it has to come down. You know, there was another section, and maybe you're going to bring this up, but I think it's relevant for this conversation. There was another section of the article where I talked about the standard sort of residential real estate commission arrangement where homeowners are paying 5 or 6% to sell their houses. I also think that needs to go to zero. Now, companies like Redfin and Zillow have been trying for years to address that market unsuccessfully, but that to me is like the lowest hanging fruit of this whole thing. So if you think about it from the standpoint of an average American homeowner transacting, like to take a 6% hit like right off the beginning is really kind of bad, and it doesn't need to be that way, because at the end of the day, you know, outside of certain markets, like brokers aren't really adding the value to justify 6%, in my opinion. But anyways, on this, yeah, look, the transactions are run on these antiquated systems, like I mentioned earlier, like escrow. You know, some states run through an escrow system, and some states run through lawyers. And at the end of the day, like once you're sort of, unless you're beyond, like let's say a $25 million deal, every single contract that you're dealing with is completely non-negotiable. The loan stuff, the transaction documents themselves are standard forms that have come down from the state regulatory bodies. So it's an absolute waste of money to be pretending like you have a say in these documents and paying lawyers or escrow companies to deal with them. And smart contracts, you know, if they're going to be standard language, then the next evolution is to put them in smart contracts and let people start conducting business that way. And the cost will come down because these intermediaries are going to have a hard time justifying what they're charging.
No, I mean, I 100% agree with you on that. I mean, I think any ways we can automate the process, as you mentioned, is antiquated. It's been being done the same way since the beginning of time almost. So what are ways we can automate it? How can we leverage technology to make our lives easier? And in ways that we do that and cut out cut out the fat, it should definitely reflect on the seller. And in terms of transaction fees, I cannot disagree with you on that from my standpoint, especially as a technologist. But I do see the value now from a broker or an agent perspective, in a sense, you know, helping that buyer or seller navigate through the process, providing insight into, you know, the home, into the investment, and into other things that maybe a person who's not that drilled in or tapped into the markets may not see, or helping them through the process. So I see the value in that, the more hands-on side. But some of the services, I mean, when you start going through the title company and the searches and the municipality charges and random transfer taxes, and you know, how can we make that better, right? And I don't think there's, you know, and that's what we're going to get into now, right? I think the idea of, okay, we're going to use crypto to buy a home, I think that, you know, at one point, maybe 8 years ago, that was like novel, whether you just use the crypto and you convert it to cash and you buy it. But at this point, right, I was going to ask you now, can we get into other use cases, how the blockchain technology can actually improve the real estate buying process?
For sure. Yeah, before we move on though, I do want to point out, so on the question of sort of the transaction itself, real estate, there are a number of companies that are going after this. One of them is called Proppy, is probably the most well-known one, which is worth looking at. And even Proppy's kind of struggled, I think, to get their platform up and running because it's so fragmented, the system in the United States. You know, you got 50 states and all these cities, and they have different rules and stuff. The future is eventually going to look like all this takes place digitally, but to get there is actually going to take quite some time, because you've got to get all these government bodies essentially to agree to say, you know what, we're not going to do title the way we've been doing it with these paper records. or these antiquated database systems. We're going to use a blockchain, and this is a blockchain we're going to use. But that is the future. It's just going to take a long time to get there. On the other use cases, so I'm super excited about real estate and crypto because I actually think, to the earlier conversation about whether or not crypto's, going to make it, whether they're going to survive. I think the answer to that question depends upon the extent to which cryptocurrency or blockchain technology gets used in the actual economy. Now, you could say, like, putting aside the metaverse and gaming for a second, crypto needs use cases. And so you mentioned one use case, like payments. Like, that was sort of the original idea. Like, can we use crypto to make payments to buy real estate or buy a pizza or whatever? That was the beginning. And now we've evolved into a new phase where there's all these DeFi apps. But the problem with most of the DeFi apps of today is that they don't do anything other than incentivize the speculation on other DeFi apps. So it's like this incredible speculative mess. But real estate is offering something right now which actually could be useful, which is like, okay, if you can start to use cryptocurrency and blockchain technology to tokenize real estate assets and trade those or allow people to invest in those tokens, you actually have a use case that's valuable. It's something that people could use. It's tied to a real world economic activity. It's something that's happening today, but it just doesn't have this extra technology on top of it. And, I think it's a huge opportunity. And that's where basically all of the money's going. So if you spend time sort of Googling like real estate and blockchain, what you're going to find are like dozens of companies attempting to do real estate tokenization. And the market's, yeah, go ahead.
And this will help our audience, because many people might not be familiar. When you say real estate tokenization, what exactly does that mean?
Yeah, so great question. I think the best way to describe it is if you rewind the clock a little bit and think about what started to emerge in like the 2010 era, which is crowdfunding. The idea behind crowdfunding is that you would take small investments from people, pull them all together to invest in a bigger project. And so that was sort of the wave one of the democratization of real estate investing in the country, and it started about a decade ago. So the idea is you take it, you slice it up into smaller chunks and make it more available to ordinary people in the country instead of just rich people and funds and institutions. Now, the tokenization piece is you essentially take that contract that the crowdfunding groups have spent the last decade messing around with and trying to perfect, and you put it on a digital ledger. And you give it a token that can be traded. Ideally, that's the ultimate goal, is to have these tokens be tradable on an exchange, just like a share of stock. So if you take an apartment building, let's say you have a 100-unit apartment building in New York City, you slice it up into shares. Each share starts off with a value of 100. These shares, in the future that's being imagined by the innovators in this space, one day the shares of these individual projects and buildings across the country will be trading like stocks of Amazon and Apple. And the thing that's going to be traded is the token. So hopefully that explains it in clear enough terms.
No, I think that's a great explanation. So what we have a question from the audience. So let's post that up, and please feel free. If there's any questions or things that we touch upon, you want to get further clarity, please comment on Instagram. If you go to our website or go to YouTube, we'll post your comment on the show itself. You're getting behind the scenes footage, so we pin the website. You can watch it live from there. Let's post a LinkedIn comment. LinkedIn user, what happens if those government bodies never agree to crypto in these cases? What would happen then?
Thank you for the questions. Very good question. I think companies that are innovating in this space, like Proppy that I mentioned before, are already thinking about that because they've struggled so hard, I think, to convince government jurisdictions to think differently about what they're doing. There is another sort of technological tool that people are experimenting with that could work to essentially circumvent the antiquated title systems, for example, of a state, which is to use NFTs to facilitate the transactions for real estate. And so at a high level, this is how the transaction works. And Proppy's done two of these. They've done one in Ukraine, which was before the war started. I think it was a year or two ago. And they did another one actually in a suburban neighborhood, I think in Florida this year, where they sold a house using an NFT. So the idea is basically this. You take your real estate, which is has a title record in the county records of whatever state you're in, and you put the title in the name of an LLC, and then you create an NFT which is tied to that LLC. So essentially, from a legal standpoint, the NFT gives you the right to the ownership of the LLC, and then you can trade the NFT. So this is not dissimilar from like the way the stock market works in a sense. Like you have, even if you have got your brokerage account at TD Ameritrade or Schwab, like you don't really hold the title to the securities yourself. TD Ameritrade is kind of holding it for you, and then they trade, and there's all these trades back and forth, and they kind of balance it at the end of the day. Something similar like that is happening with this idea of NFTs, which is the NFT could trade 1 million times, and all that's really changing is the name of the signer on the LLC. So XYZ LLC owns the property, NFT gets traded, and every time it gets traded, the name of the signer on the LLC changes. And so that would circumvent, essentially, from a technology standpoint, completely circumvent the title systems in America. And people are experimenting with that.
Okay. No, that's my question with that, because that particular use case is we have this NFT tied to the LLC. The NFT gets traded over and over again. But in terms of the ownership itself, right? Because it's a real property you're dealing with. There's an LLC in the middle, and there's an NFT. Can the person who started the LLC just basically run off, or not even run off, just say, you know what, I don't have any. You have an NFT, but you have no tie back to this property. I own the property. I'm going to sell it now. Like in that same thread, right? I'm going to sell this property as an LLC owner, the person who started it, but I don't want to give any funds back to that NFT. How does that process work in that scenario?
Yeah, it's a good point. It's not as simple as I described it, because the underlying transaction, like if let's say I was the person who put this deal together and you bought the NFT from me, there is a legal process that would have to happen where there would be a new operating agreement signed for the LLC that both you and I would have to sign. And yes, you'd have to be careful about it, but that could be done via smart contract too. That's not that complicated, right? You use DocuSign, you send it to both of us, we sign it. So you would know, at the time you're purchasing the NFT, you would know whether that operating agreement has been signed. And then at the state level or the government level, it's not as simple as I described it either, because a lot of these, almost everywhere in the United States, has transfer taxes. And so almost certainly, if you were doing this at scale, the government would look through these transactions and attempt to try to charge transfer taxes on every trade of the NFT. So I don't think there's a way to avoid that at this point. That would happen. Now, people don't trade real estate, especially entire pieces of real estate, all that frequently. So I still think the NFT thing could work in certain use cases. Like let's say Blackstone is selling their portfolio to another fund. That could easily be facilitated via NFTs, because it's two sophisticated parties. They figure it out. They pay the transfer taxes. So maybe it starts at that level, and then as the technology gets more advanced and governments get more receptive to it, maybe it starts to go into more retail transactions, like people buying their houses.
And we have another question from the audience. Isn't that just a digital deed which already exists? Which is what's actually different in the case of an NFT?
Yeah, I think there's not, from an idea standpoint, there's nothing really different between an NFT and a digital deed when it comes to the real estate. The NFTs, depending on how they're put together, what cryptocurrency they're tied to or whatever, there's a technology that quite frankly, I don't really understand, the nuances of how these NFTs are minted and different blockchains, but they do have a different layer of technology than what the county records would show. I know some counties are experimenting with doing things digitally, but everywhere that I transact, you still to do a property transaction, you need original wet signatures from the parties involved. They take a physical document. You can scan it in and send it, but you ultimately have to deliver the physical document to the record. So right now it's not being done digitally, at least where I transact.
Yeah, I have it in places, in a place where I'm only in one state, in one city right now, but I haven't seen a digital deed in my transactions over the years. Everything, like you said, Well, you know what? Actually, I have to say, I did do. Uh, I didn't have to go face to face. It was a deal I just did recently, and this is the first time ever. And I guess it's the age of COVID, right? I didn't have to physically go to the title company. It was the DocuSign situation. It was a real straightforward deal. You know, signed it through DocuSign. They're gonna deed it with the state, mail it, but it wasn't a wet signature. And that's the first time in my 20 plus years in this business that I've actually have done everything from my home. I didn't have to leave. So I felt that was interesting.
Yeah, that's progress. That's progress. Yeah.
So let's jump into some other aspects of your article. Your article's like has so many different things. I want to jump into the history. You talked about an accredited investor, and then go back into the fractionalization and tokenization aspects. Because I think on certain projects, you can only could be an accredited investor to take part in it.
Totally. I'm glad you brought this up because, in my view, like I mentioned earlier, this sort of fractionalization and tokenization is the key point of innovation in the industry right now. And it's struggling because of this regulatory framework that the United States in particular has around accreditation. And it goes back to the crash of the 1929 era and the Depression and SEC and the idea of how you could protect investors from fraudsters and swindlers and whatnot. But what it's evolved into is essentially to sell a security in the United States, you either have to register it, which is a very lengthy, costly process with the SEC, or fall under some exemptions. And the most common exemption is called like a Reg D exemption. And essentially what Reg D says is like, hey, if you sell this security to accredited investors and maybe a few non-accredited, like you could sell, I think the current limit is like 35 non-accredited investors or something like that. Then you don't have to register. And that's what a lot of the tokenization platform companies are attempting to do, is avail themselves of Reg D. And it makes sense because it's the path of least resistance legally. And its downside is, one, you can only take accredited investors for the most part. You can take a handful of non-accredited. And two, what comes along with the Reg D filing is a 12-month lockup for trading. And so the next phase of the evolution, which is like, hey, the only reason you would tokenize something is that you want it to trade. And so what Reg D is kind of blocking is like, nothing is going to be tradable for a year. And maybe that's a good thing. Who knows? It's unclear now. There's a bunch of projects that are in the process, like of doing Reg D tokenizations, and their tokens aren't trading because they're in this lockup period. So we just don't know how they're going to trade. It's still one of the big unknowns of the market. Now, there's some other ways around it. Like there's another exemption called Reg A, which I don't have a great command of the details of Reg A, but my understanding of it is this. Essentially, it's like a mini registration. And so you go through a registration process, but it's not as onerous as if you were like filing to go on the NYSE or NASDAQ. So it's like something in between. And what Reg A does for you is if you get approved, then you can sell to non-accredited investors and things can trade right away. And so there's a few companies that have successfully got Reg A. I think there's one out of New York that it has a really interesting platform. I think it's called Lex. And Lex is doing fractionalization and trading, but not tokenization. So basically they're not creating tokens, but they're allowing people to trade fractions of these buildings that they're selling on an internal platform. And I believe they got Reg A. And then there's a few more that are attempting to get Reg A.
A question on that, right? So you would have to be a user on their platform to take part in the trading. It's not external, right? With this fractalization without the tokenization aspect. Is that accurate?
Yeah.
Okay.
And some companies are opting to do that because I think even under Reg D, like if you do a Reg D exemption and you sell to only accredited investors, you can allow for trading after, I think, 90 days amongst those investors. So there's another company which is doing great work called Red Swan. They've tokenized quite a few properties on their platform. And their platform, the way I understand it, is set up to where the Reg D holders can trade their tokens on their platform, basically after 3 months or something. I don't know how much trading they've seen because I haven't logged in to see what the volumes are, but there's that. And then sort of the future. So the future state that everyone is imagining depends upon another player in the ecosystem. So if you think about the ecosystem that we've been just talking about, you have real estate owners and developers. You've got people in the middle trying to tokenize or fractionalize or some combination thereof. And then you have the trading. And the imagined future is that there's all kinds of liquidity. The liquidity is only going to come if the trading ecosystem takes off. So the most prominent trading ecosystem is called T0. They're one of the farthest along. There's a couple that are pretty far along, but they're probably the most well capitalized and farthest along. They got a huge investment from the parent company of NASDAQ. I think it's called ICE or something like that. So, but the idea from behind T0 is like you become a registered broker, you get your licenses, and then you can allow for the trading of these security tokens on your platform after their lockup periods. Obviously, they all have to get through their lockups. And they're going to try to be like the mini NYSE or mini NASDAQ for digital asset tokens. And if they are successful, the key to this industry, in my opinion, is if the alternative trading systems like T0, Oasis Pro Markets, if they are successful, then this works. Because what's the point of tokenization if there's no liquidity? You have to be able to trade them for this to have any use case. And so I'm watching that one carefully, but they're very early. They only have a few things that are actually trading it at this time.
No, that's interesting. I was reading your articles. It was something about accredited investor part that I found like hilarious, right? And I'm just going to quote it. For what it's worth, I think they got it wrong. While there is some connection between income and wealth and investment acumen, the connection is very tenuous. I have met plenty of accredited investors who have absolutely no idea what they're doing. I've laughed out loud when I read that because that's like because money equals a certain level of acumen and intelligence in the eye. So when I read that part, I found that hilarious.
That's funny. Yeah, the SEC and they were trying to find a proxy, basically like how do you determine whether someone's financially literate? It's actually a non-trivial question, right? Like finance is complicated, and there are plenty of people with a lot of money who know absolutely nothing about investing and are just as susceptible to being, swindled, for example, which is what the original intent of this was, than any other person. And there are a ton of people who don't have any money who are like the smartest finance people in the world. And so the test, in my view, is just a little too blunt. Now, I don't know how you do it the other way. Maybe there's because you don't really, logistically, you can't really determine someone's financial literacy very easily. So it's hard for the government, but what we have now is broken. And I kind of feel like they've been sort of deregulating it. Like that's what crowdfunding started. They passed this landmark legislation called the Jobs Act, which allowed for expansion of exemptions to allow non-accredited investors to invest. But I hope that kind of changes over time and it's easier for people to invest.
So, I mean, if we're looking at various use cases we're covered, right? Fractionalization, tokenization. We talked about the idea of tying an NFT to an LLC, and that's actually not just an idea; it's actually implemented in Propy, like you said, in the Ukraine prior to the war, and also in the U.S. in Florida. What other use cases are there?
Yeah, I think there's the whole smart contract lane, which has a lot of potential, but is probably difficult to pull off because the entrenched players in that field are going to be resistant to it because it's a deflationary thing for the market, meaning their prices are going to go down, like we mentioned at the beginning of the show. But that's really important. And then there's new business models emerging related to the metaverse, which are kind of interesting or could be kind of interesting. But I think you had another question. I want to make sure.
So just so people who might not be as familiar with smart contracts, can you talk about what does that mean? What is a smart contract?
Yeah, I think the idea of a high level of smart contract is that you take the language of a traditional contract, which normally lives in today's world, like on a PDF document inside of people's Dropbox accounts. So that's where you find contracts. And instead of having it there, you codify it in an actual piece of software. And this was kind of the core idea from a fundamental standpoint of the Ethereum blockchain is like, wow, if you could codify contracts so that people could just see all the terms. They don't have to like go to Dropbox and look it up and see what the deal was. The deal is just out there for everyone to look at. And then, round two, if you've got it really good, you could have sort of automatically executed provisions. Like, for example, like let's say the contract required me to pay you X dollars in rent on the first. If I didn't do it, a late fee would be assessed. So that late fee could hit the ledger. Boom, I owe you an extra $100. If I didn't pay you on the 7th, there would be a notification sent, like late payment. I'm about to file eviction on you. That could be sent digitally automatically with no intervention from a human being. And, if the government got involved and was in on the whole thing, you could even do the legal paperwork. So let's say you had to evict me, you could file the eviction paperwork digitally. So that's the dream of smart contracts. Now, it's nowhere close to that today, just to be clear.
And, I like talking about smart contracts with actual lawyers. And, I know you've been a lawyer for decades now. What's your legal, I know you're a developer, as a real estate developer opinion, but what's your legal opinion on smart contracts and the change to the industry?
Yeah, we live in a weird era actually where we sign a lot of contracts that we don't read. Even in my business. But just think about the ordinary person. They're going online, they're starting a new account, they're opening a brokerage account, or they're starting an account on Instagram. Like every time you do something like this, you get served up this like humongous legal document. And you can scroll to the bottom and just click, I have read and understood this without really reading it. And that's what everyone does, myself included, because gosh, who wants to read all this stuff? So we live in an era where essentially we're like signing a bunch of legal things without really thinking about it. And that's it's been a problem since the beginning of the internet. And it's an even bigger problem today with the increased financial transactions on the internet. I think smart contracts are a good solution for that, because you could have the key terms clearly articulated in plain English rather than legalese, and it'd be easier for people to understand. So like the onboarding of a contract would be much easier for ordinary people, non-lawyers. And we just haven't seen anyone attack that yet. And there's a lot of reasons. Like lawyers are making a lot of money. Like profits per partner in American law firms are like in the millions now. And they're going to protect that for a very long time. But we'll see who wins, the technology companies or the lawyers.
And question on that, in terms of what you just mentioned, in terms of the terms and agreements that we don't read and we scroll through, sometimes it looks like it's intentionally trying to hide things that they want you to not question and just breeze, especially in the case of, we look at what happened now with Celsius and the withholding of client funds, right? And they did mention, right, that they have the right to do that, to withhold, to stop withdrawals somewhere in the depths of their agreement, that most people were blinded by the gigantic interest rates that they're going to get on their deposits, and they just ignored it. So it's an interesting point in terms of the smart contracts and taking out the legalese that you mentioned.
Yeah, and having a different onboarding thing, like the Celsius, that's a great example, because like in the future, there should be basically like, you need to get people's consent to the actual key terms. Like that's a key term that should flash up in red. Like, hey, just so you know, I can withhold your withdrawals, or I can pause your withdrawals if I want to. Or you still want to go forward? And then you should be able to click yes or no.
Yeah, absolutely not.
Yeah. Yeah, but so that will probably change, and technology will help do that. So ultimately, I think smart contracts is a great use case. Other fun use cases are companies that are innovating with the metaverse. And this one's kind of tricky, but because who knows what the metaverse is really going to be. But I even ran across, I was kind of updating myself on what's happening in the market, just because I wrote that article quite some time ago now. And I came across a company that is doing something where they've taken it completely virtual. So here's one example. They're buying metaverse properties. So they're buying virtual land in Sandbox, Decentraland, voxels, and they're fractionalizing those. And their goal is to tokenize those and sell those. So if you don't want to buy, the idea behind that is if you don't want to buy metaverse land yourself, you can buy one of their tokens, which represents some portfolio of this. So we're already starting to see like the completely virtual version of this tokenization strategy, even though tokenization of the real world stuff is still in sort of the nascent stages. Another one I saw that was kind of interesting is there's a company that's attempting to sell homes, I believe down in Florida. And as part of the deal, you get a digital copy of your home that you can port to different metaverses. So let's say, I don't know what you would do with this, but let's say you wanted to have your digital copy of your actual home in Decentraland or Sandbox. You could do this. That's their business model. I don't know how many homes they've sold that way, but it's somewhat interesting.
Let's rewind. Let's stay there for a second, right? So buy a brick and mortar home, a physical property, right? And now I take a digital representation of that and I put in the metaverse.
Yeah, that's the idea.
And when it's in, can I now trade that digital representation or sell it to someone? And then how does that impact my physical brick and mortar home?
Yeah, so the way the metaverse platforms work today, like you'd have to do what they're advertising to do, you'd have to own a piece of metaverse land. So let's use Sandbox, for example, because this might actually happen because there's this weird phenomenon happening in Sandbox where Snoop Dogg is affiliated with some sort of development inside of the Sandbox, and people have been bidding up the neighboring properties to Snoop Dogg's property. And I think Snoop Dogg did actually built a digital like villa of some sort in this part of the Sandbox. And people are trying to live next door to him. So using that as an example, you would buy your house from this company, they create the digital replica, which by the way is basically just coding, right?
Yeah.
You get the Sandbox code and you figure out how to make the house. It's not that complicated. It's like Minecraft, if you're familiar with that game.
Yeah.
And then you plop it on your metaverse land in the Sandbox, hopefully next to a celebrity. And then maybe your digital avatar could walk next to Snoop Dogg's digital avatar and you could have an interaction in the metaverse. I think that's what people are thinking is going to happen at this point.
Pretty interesting stuff. Pretty interesting stuff. I know a few weeks ago I was in Atlanta and we were driving past Rick Ross's mansion, a lot of land, but I made a comment and the location of where it was situated, it's a little bit different than you would expect. I think Evander Holyfield owned it prior. It's in the city limits, but you cannot, it's in front of a highway. So let's say you're just a random spectator, you want to get inside look, you cannot stop. You have to keep it moving, right? Or you have to go inside and there's security and stuff like that. So, and then when you go past it, there's just other regular homes, like people that they just look like, regular single family homes, not owned by multimillionaires or anything like that. And I just found that interesting. I literally just thought about that as you were talking about Sandbox and living next to Snoop Dogg's digital version of the home. It's very, very interesting stuff.
Yeah,
interesting.
Yeah, like I'm keeping an eye on that. I think that metaverse is here to stay, and like it's a big technology issue. So ultimately, like whether or not people hang out in the metaverse depends on how good the tech is. But some of the tech is pretty interesting. Like my kids are like, playing Minecraft and Roblox, and these are sort of, in my view, sort of early metaverse things, and they're actually awesome and great games, and they have so much variability, and they're way better than the games that you and I played when we were growing up.
Yeah, I can imagine.
Yeah.
Question for you now. I know we're about to wrap up. you know, you do a lot of stuff obviously in the real brick and mortar world. You know, I've done some things in the brick and mortar world. In talking about the metaverse now and talking about real estate, do you see Metro's Capitals doing something there in the future? Right, because I know you talk in part of the bio is America's great cities, where you have a lot of your investments for Metro's Capitals, you know, across California, Atlanta, and so forth. Um, what are your future thoughts on that?
Yeah. So starting with the sort of tokenization concept, I'm super excited about this space, and I'm going to do some. I'm going to experiment with some of my own properties and try to tokenize them and see what happens, because I think it's something that I want to learn more of. I want to understand the tech, and I want to see what happens with it. It's such a key point, because if you take the imagined future state that I've been describing, where like all these buildings are tradable, it really does change things in this investment world. It really a lot of companies like to talk about the democratization of finance, for example. This is an area that is like completely closed off essentially to almost everybody. You want to invest in a cool building, you want to own a skyscraper, like 0% chance as an ordinary person. Now, with a technology like this, it looks like it's going to be possible. And there are big developers. Like, one thing we didn't talk about is that there are some developers who are experimenting with one-off tokenizations. Like, there's a group called Night Dragon, which people should look up. They're doing a building in a very cool neighborhood in London, I believe. I think it's called Night Dragon Building 4. And they're tokenizing a big piece of it, like 80% of it. And so that's a great example. Like, man, ordinary person never get a chance to own a piece of a building like that. And so if they pull it off and the token is structured right, that could be an incredible investment for people. An early one that's actually trading right now on T0, a group that owned the St. Regis in Aspen, they tokenized a very small piece of it, like $20 million worth of the equity they tokenized maybe 3 or 4 years ago. And that trades on T0. The trading is very light, but it's actually trading. So if you want to own a piece of the St. Regis Aspen, go to T0, open an account, and you can buy some tokens. And so these kinds of things, like, they make me super optimistic and excited that we are going to see meaningful improvement in the options for investors of all types.
That's interesting. I'm actually gonna look into that myself. Definitely sounds like some interesting use cases. And you know, when you're an early adopter, especially if you're in a situation where you do have property, you know, obviously not your main house, right? But you have investment property. It sounds like an interesting experiment. Even if it's a portion of that you tokenize, you know, you're not as big as a regular skyscraper, but in relatively speaking, how can you leverage that? Because the one thing that from liquidity is always the main thing. Like, how can we get more liquid so we can buy more assets, right? So if now you can take that same approach from a crowdfunding perspective, right, and with the tokenization and then fractionalization and then getting that liquid by trading it and using it to build more, sounds like an interesting idea that's worth looking into, as you said.
Yeah, for sure. And another dynamic that the tokenization is kind of bringing to people's minds is that it's going to, if it takes off, it's going to fundamentally change the relationship between a real estate owner, developer, and their investors. So right now, you know, if you take investor money, normally what that means, you know, let's just talk at the institutional level. You're buying a skyscraper in New York City. You need money from pension funds or other hedge funds or whatever. You need big chunks of money. And what happens to the real estate developers who put these deals together is that because the dollar amounts are so huge, the people who are in the driver's seat are often the investors. And so friends of mine in the industry who are used to basically like taking whatever deal that they can get from investors are excited about tokenization, because it gives them a little bit more power. If these things could be traded out of, like what happens in my business, if you do a deal with an investor and conflicts happen or whatever, it's hard to get out of it. How do you get out of it? The only way you get out basically is you could sell the whole asset. You might be able to bring another investor in to buy out the position of the original investor, but it's very complicated. And so people on my side of the table are super excited about tokenization is like maybe it will change the balance of power dynamics in real estate industry in general, where the investors, the big investors like CalPERS and whatnot, have a little bit less power because people have options. They can tokenize, they can make it liquid, they could sell it to international investors easily. So I'm interested to see how that develops too.
Very, very, very good points. Nick, I want to thank you for coming on the show today. It's been an amazing conversation. I took away some knowledge from it as well, and I'm sure my audience members have also. How do people find you? Also, because we referenced a lot of information from your article in Profit, how can we become subscribers to your newsletter?
Yeah. First of all, thank you very much for having me on the show. I really enjoyed this conversation and appreciate what you're doing with the whole program. People can find me on my website. It's very simple. It's nickhilaris.com. And you can subscribe. I set it up to where you can subscribe for free or choose to donate. And it's been actually, this is a topic for another conversation. It's actually been really interesting to see. I didn't expect people to pay for it. I started this kind of a couple of years ago, and people actually do, which is kind of heartening in a way. So there's nickhilaris.com. And then I'm not that active on social media, but I do have an account on Twitter at Nick Hilaris and LinkedIn. I think my name is on there is Nicholas Hilaris and not Nick Hilaris, but that's where people can find me. And please subscribe. Look forward to having anyone who's interested.
That's awesome. And you know what? Let me do this real quick. So I like to put it as part of the show. I'm gonna on another screen go to Nick Hilaris so I can just post it as part of the video, so it could stay with the video forever. Just give me a second. Should have that.
We should talk about your third one, the health and fitness, because we also share that. You want to spend 2 minutes, on that?
You do not have to twist my arm to talk about health and fitness. That's something I'm extremely passionate about, man. I'm like, and I think, I was always into it, but I think after being on lockdown, it just took it to the next level when all the gyms were shut down. And I was just playing Goggins and Jocko, well, these guys, Navy SEAL guys, over and over, and Eric, ET, and just playing it and working out outside. I had and then I'm a huge fan of jujitsu, and I do comps and stuff like that with guys a lot younger than me, and just love staying in shape, man. From running, swimming, all that stuff. I'm a total into. What about yourself?
Okay, so you have a diversified program, but is it centered around martial arts, or is that just like a small piece of it?
I would say martial arts is a big piece of it, but I do a lot of functional training now. I'm huge on functional. So even in the gym, when I was younger, I used to work at a gym in college, but so it was like lifting a lot of weights. Now it's more so sled pushes. It's more so, putting on the weight vest, doing a lot of functional exercises, a lot of, not a lot of running in terms of mileage. I'm a 1 mile guy. I just like waking up, doing the mile. But then what I do like also is like the running, then going to jujitsu for an hour, then going to do the functional, then swimming. That's like a perfect series of activities for me, because it also helps with like stamina. And recently started my yoga once a week. I love my hot yoga. So I kind of I do a lot of different things. And it just adds on to the well-being. What about yourself?
Yeah, I love that. I try to do as much as possible. Like I'm with you, like 2 or 3 hours a day would be amazing. It's hard to do that. I got young kids, so I'm busy taking care of them. But my core right now is CrossFit. So basically I have this crazy morning routine where I get up at like 3:30 and I work and write for like an hour or two, and then go work out at 6 a.m. at this local gym. And I try to supplement it with basketball, tennis, and some other random sports that I like to play. But for the longest time I was into martial arts. I actually met my wife in an MMA gym.
Peace.
Yeah, Muay Thai and Jiu Jitsu are the ones I did. And I love doing those. Are great sports and super good training.
Did you play ball in like basketball in undergrad or in high school or something?
No, I wasn't very good until I was older, actually. I was like smaller when I was in high school. And then when I got to college, I got bigger and stronger. And now I'm decent basketball player.
Yeah, I suck at basketball. So so if
Got it.
people are gonna go stereotypes. I mean, it's so funny because I was working at this one firm and they had like a basketball thing they did every like week. And as soon as I started working there, they saw me like, oh, I'm gonna want you on my team. And I'm like,
That's funny. So
I went
they
every
were like
time. I was like,
profiling. Yeah.
yeah,
Yeah.
that's they were like I stand about like 6 feet, and they saw me. They saw athletic. I was like, wow, we do this weekly basketball thing. You should come. I'm gonna definitely
Yeah.
want you on my team. And I'm like, you really don't want me on your team for that.
That's so
So
funny.
that's funny that you mentioned it. No, I mean, I think I'm a firm believer in like we talk about investments and from a wealth standpoint and things that we do. I'm a firm believer that you just have to make the same investments in your health. I mean, and I don't, and it's weird. It's always been weird to me that people don't think about it the same way. They always think about, okay, I'm going to invest this when I'm in my working year so I could have this when I'm older, but they don't think about health the same way. And I know plenty of people that like retired and I mean, from all walks of life, from wealthy to poor to and in between who retired and just died, like literally just died. And it was just like from a natural ailment and because they just didn't focus on health. So I just think it's extremely important. Obviously, when you start talking about MMA and sports, I mean, that may be an extreme level for most people, but just like walking or doing some sort of physical movement on a daily basis, if you can, I mean, it's just so important. Plus nutrition and things of that nature.
Yeah, I agree. I think it's one of those things in life where you have to make it non-negotiable. Like it has to become part of your like just what you do, who you are, because it really is so important. And I've been thinking, I've been writing a piece actually for the newsletter. I haven't finished it, but I'm noticing this sort of disturbing trend in America where fitness is becoming a luxury good, basically. And what I mean by that is like, like I live a very privileged life basically because I have, I'm an entrepreneur and I have control over my schedule. So I can go and take an hour or 2 hours and work out. And that is like that's a huge privilege. Some of the people that work, around me that I'm friends with or whatever, work at coffee shops or restaurants, they're driving an hour to and from work. Like it's because it's hard for people to stay in shape if they don't have the schedule flexibility. And so I'm a little concerned about that just from a societal standpoint. But I try to encourage everyone I meet, just to try to carve out even 15, 20 minutes. Like once you start doing it, you can change your life. You really can.
You know what? It's not the topic of the show, but I definitely would love to drill down on that topic with you on in some medium, in some way, shape, or form. Like the idea of fitness being a luxury item in terms of time and scheduling, I have never looked at it that way. You know, it's always well, I remember pre-COVID commuting to New York and for like spending an hour. It was a ridiculous time commuting from where I lived into the city. But then, the way I did it was I would leave extra early, and then my first stop would be this. I used to be a member of this really cool gym where they just do everything for you. That's my first stop, and to the point where it's like steam rooms, all this great stuff. And then when I finally got into work, right, people will look at me because the New York commute and even if you're in MTA, it's just crazy. Everybody's stressed. They're like, "Why are you so relaxed?" Like every morning I see you, I'm like, "Dude, because this is not my first stop was
Yeah.
never here. It was always the gym." So, but I like what you said in terms of fitness being a luxury item and things of that nature. And that's really worth drilling into, especially when we live in a society where we drive everywhere, or we're not walking places. It's always you drive somewhere or you're on some sort of transportation method, whether it's a train or bus, and you're sitting. So it's a very sedentary type of lifestyle until you get to your destination. It's non-active. I would love to drill down with you on that.
Yeah,
That's a topic that I would like to talk about.
we should talk about it. Yeah, because there's more to it too. Like there's other aspects of society that these that are problems like economic segregation, and economic segregation is actually related to this fitness topic because what's happening in American cities is essentially like it's getting more and more segregated based on basically how much money you have or what your income is, and the access to food is different, the access to
Yeah.
exercise is different, Commute times obviously different. It's like if you look at cities, like I kind of geek out on some of this urbanist stuff, but if you look at cities, they're beginning to look like 19th century European cities where sort of the outer rings are where the people who actually work in the cities live. So like construction workers, restaurant workers, and then the sort of wealthy people live in the cities and they get to enjoy all the amenities of the city. And that's kind of what's happening all across this country. And I don't necessarily think it's a good thing because the options out in these exurbs and suburbs are not as good. And
And,
yeah.
and what's interesting, you understanding that and doing the research on that, how does that play into your decisions in Metro's capital and some of the sites you choose or future sites you choose to build on?
Yeah, we've been focused on the urban core because that's where all like the exciting developments are, and quite frankly where the deals make any sense. Part of the challenge that we've seen over the last decade is that because of the environment around investing, asset prices were trading at such high points that in real estate, a lot of the only strategies that really made any sense were to kind of go up market. So the returns to invest, for example, let's say you wanted to be a workforce housing developer, it was almost impossible to do that without government subsidy over the last 10 years because prices are too high for land, construction prices are too high. Like you can't make these deals pencil. So what we've been doing is focused on trying to produce essentially luxury housing developments, and then we give back to the community in other ways. I would love to be able to deliver affordable housing where I live, but it just doesn't work without a massive subsidy from the government. And so we focus on helping homeless housing developers and homeless service providers and things like that to try to at least play a part in improving the community.
Look, you're someone that I can spend hours talking to because I think we have a lot of similarities. Yeah, I could keep going on. It's just because every time we start touching on something, it opens up a whole new thread. And I know I sometimes jump back because like I started back on the health side, right? I started more on the striking side, so the Muay Thai and things of that nature. I just I've been more focused just on like grappling as of the last couple of years. Plus I got tired of getting punched in the face, man. Like be honest, 100%. A lot of my young guys that I still train with, they spar me. I'm just like, I don't feel like getting hit in the head anymore, man. But
Understand.
Wait, last question on that. When's the last time you went to an MMA gym or did the sparring or picked up gloves or things of that nature?
Yeah, last time I spar, I for right before COVID, I think was the last time. I had a friend of mine who's a phenomenal Muay Thai fighter, and he would spar me and not try, because if he tried, I would get knocked out. But it was fun, yeah. But it's been a while. I've been craving to go back into it.
No, that's definitely awesome. Nick, like once again, man, thanks for your time. I'm happy we connected. Everyone, I put Nick's website on below as part of the video. So it's there, nickalaris.com. You can go and subscribe and donate to his newsletter Profit. I know I'm gonna definitely subscribe after this show. And he really spent I must say, from a compliment perspective, you spend so much time in detail in that newsletter. It was literally like reading a magazine. And you touch on different topics. I mean, I know we focused only on the real estate and blockchain aspect, but then I saw the article on Afghanistan and just various things that you put there. So it was the layout was like really, really, really good. So I'm gonna be a subscriber for sure. I'm interested in what you have to say and your perspective on things. So that's my I definitely want to learn more about it and get part of that cycle so I can start getting those monthly newsletters.
Well, thank you very much, man. I appreciate that, and thanks again for having me on the show. This was fun.
All right, to everyone, once again, our show is sponsored by Strategic Generation. Thanks for your time today. I wish everyone a happy weekend. And we're back again next Friday, 12 p.m. Eastern Standard Time, live Tech Behind FinTech every single week. Once again, thanks for your time and cheers.
Bye, everybody.